don't have the same price.
Now, KCB Group has posted at 30.7 billion in net profit for the 9 months ending September 30th, 2023. Now, the bank's assets also soared to 2.1 trillion shillings as its loan book grew to gross the 1 trillion mark. KCB Group has defended its involvement in the G2G oil dealings, noting that it has cumulatively guaranteed fuel import purchases worth 514.96 billion through letters of credit. KCB CEO Paul Russo spoke to Jimmy Mbogo. Good afternoon, Jimmy.
Those were some of the numbers just looking at KCB's performance in Q3 of 2023. Now, of course, you have the big number there. That is about 30.7 billion in net earnings. And of course, just looking at some of the other issues that have come out, is the fact that these are some of the areas that they see a lot of headwinds. One of them being the depreciating currency in the country. Of course, fiscal pressures coming from across the region, not just Kenya, but all the East African market, as well as global geopolitical risks. Now, just to go take you through some of the other numbers, one of them, of course, is the fact that NPLs also went up from 15 up to 15%. That is up from 14.2. And of course, I will be speaking to Paul Russo, who is the Group MD of KCB Bank, just to be able to understand and make sense of some of these numbers. All right, Paul, thanks so much for making time to speak to us. And of course, quite an interesting combination in terms of just looking at your performance generally. So one of the things that we have seen is the fact that your loan book has crossed the 1 trillion mark. So you have been speaking about the question of particularly risk-based pricing. How has that changed the loan book portfolio?
I think the risk-based pricing was meant to, to make sure that, you don't just use a lump sum pricing for people, but, those good borrowers can get better interest rates. But also for us, we saw it as an opportunity that you can improve your risk appetite, then to be able to go to segments that you probably were avoiding. Largely maybe those segments that the micro finance entities would have been.
Now, there has been a lot of movement and particularly a lot of volatility in as far as the stock market goes. And this is something that during your presentation you touched on, and that is the question of the share price going down and a lot of fluctuation that we have seen for the last quarter. So would you help us understand what has been the impact of that? And also just as we go into Q4 and into the full year, what do you expect to happen within that space?
So I think at the end of the day, how do I put it? The share price is a factor of a number of inputs. Some are in your control, others are not in your control. So when Kenya is downgraded, when investors cannot get their money out, ease of going in and ease of going out is a factor. So you've seen when the US gives better returns and you become a higher risk, then they will choose to put their money elsewhere and that will not flow. Those are things that's why I said the economy here in Kenya is all hands on deck. All of us, it's not government or all of us must do something about it. But I think, like I said, certain factors also internal would have affected. Remember, it took an aggressive provisioning in half-year results. Market was shocked. I'm glad there's a competition that has also shocked the market, and I don't think it will end there. The performance was below expectation. The NPLs aggressively went up to 22%. People felt somehow we are too close to government and proximity for government. Now, the only way you address those ones is by those matrices changing, which is what you've seen in a quarter has changed. And I'm glad the share price is taking up. But at the end of the day, the fundamentals in the country must change because it's a confidence issue. If Kenya is, downgraded, in which it was downgraded, the bigger banks that take the sovereign risk are downgraded. The counterparty limits.
We are seeing a lot of your subsidiaries outperforming the Kenyan unit. What is happening there and why is this shift happening?
So I think number one is going to the rest of the country, the other countries, was always a strategic intent. Like Lawrence said when he was presenting, all eggs in one basket, that country goes down, you go down with it. It reflects that performance. But for us, In 2016, 2019, because I was a group regional business director, we took a deliberate action to say we must grow the contribution of subsidiaries from then 6% to 25%. So it's a strategic intent and it's deliberate. Look, but even shareholders, if you came to those, they kept saying, why are you putting money in Uganda and it's giving no returns? You've deployed shareholder money into Uganda. You must get value out of it. But don't get me wrong, Kenya is still going to be the core. It's going through its rough patch. But they say, don't write off Kenya, don't see the downturn. It is just a blip. Kenya is still going to be the core. The best for us is where Kenya is powering from all cylinders and all these ones have shown up the way they show up. That is our end game.
All right, now, of course, NBK is still an issue. It is yet to turn green in a lot of aspects. So what is your plan as far as turning it green from and away from the red? Also, just so that we have it performing to maybe the levels that other subsidiaries are.
So it's a disappointment. Let me say that. It's something that we've taken up with the group board. So we're running an in-depth review. That's why I said earlier on, because it's important that by the next briefing, I'll answer that question fully. We've made a decision that we will have an in-depth review. And that in-depth review will then inform the strategies we take on NBK. Because I ran NBK. I think I know the potential of NBK. So when I say I'm disappointed, it's because I have run it for 2 years. And then it turns that performance, all right? But like any other subsidiary, I think, don't forget, when some of us took over regional businesses, the likes of TZ were making 240 million. Today they are on a run rate to make 3 billion by the end of the year. So we got competence within the organization to turn it around. So ask me this question next time, you will see the answer.
And this is the issue or the question of KCB's role in G2G. Would you help us clarify that for our viewers?
So and I'll try and be basic. One, the oil business and its importation, it comes through, right? That transaction is a letter of credit transaction, isn't it? That's that. There was OTS, right? KCB was 42% of the market, meaning we're banking 42% of the business that was going in. It is a trade finance product. Government went into a structure. There are 3 parties local that are playing in it. Those 3 were our customers, right? We just increase the share of wallet for that. All what we do is give an LC. Fuel moves from the party, the original party the government has appointed, comes in and is imported by one of these 3 parties or all of them, gets into the country. It's on a collateral management. For KCB, you either have money or there's fuel with a collateral manager, right? The core benefit, and away from other manenos, is you are staring at a point where all marketers could not get dollars to be able to import. And allow me to say this, you are staring at a stock out, right? So with all discussions that are happening, the G2G made sure there's no stock out, right? So today, an oil marketer can go and buy KES and will be able. Then we have a period to be able to convert and get those dollars, right? It is one of those reliefs. Right? Now, if you go further than that, you wade into politics. But let me stay to the bank side. They are our customers. They get LCs. They import within the framework that is available. We bank them, and we're happy. They increase more, we will be very happy to bank the rest.
There you have it. We'll be trying to crack down these numbers just to make sure that our viewers and potential investors at KCB then have an idea of how the landscape is shaping going into the end of the year, even as we look forward to NBK turning around. But for now, back to you.
All right, Jimmy, thank you.